In this video, we will talk about Alpine 4 Holdings, trading under the symbol ALPP. We will cover what the company does, the market reception, and if you should buy its shares. ALPP is a holding company with interests in multiple companies that can be qualified as part of the new economy with unmanned aircraft manufacturing, crypto mining, and metal sheets. On their website, ALPP states that their holdings should be disruptive, innovative, and stable in revenue generation. I think that the main appeal to investors is that ALPP focuses on innovation and their capacity to develop new ways of doing things. Innovation has definitely become a bigger factor in recent years. Because we now have learned, with benefit of hindsight, that by betting on innovation, there is a relatively high chance of getting the investment blossoming in future. The entire Silicon Valley is here to prove this formula. From my personal observations, I believe that ALPP is more down to earth than the eccentric startups that we are used to see on screen, because they have businesses that investors can actually relate on, and I think that this is one of their key advantages. We all know what is a drone, an operation to mine cryptocurrencies, and to manufacture metal sheets. We can picture them in our head, and the business model is also more transparent and simple to understand compared to other companies. Recently, the stock rose up to $8.50, which is a historical high for the company. Keep in mind that ALPP is still trading over the counter, commonly called the pink sheets. There are two reasons why ALPP stock is rising. First of all, it announced that in May of this year, they will complete the merger of their metal sheet company with another company in the same sector. This development has been received favorably by the market, because it would mean that both companies will have better chance to succeed by combining their manufacturing capacity and reduce their fixed costs. The more significant reason may be a recent Twitter post from the company itself, stating that they are currently working on being listed on the Nasdaq. The press release suggests that the request is progressing and should be done in due time. They have also added 4 members on their board. They also added 4 new members on their board of directors. They all have decades of experience in investing, and this is likely a move to increase their likelihood to be accepted by Nasdaq. The new directors also provide additional expertise to the company, helping them to find other interesting targets to include in their portfolio. This, in my opinion, is the main reason why the stock market was hyped up in the past few weeks. Because getting listed on Nasdaq is likely going to trigger a major increase in demand for the stock, as institutional shareholders often have a policy to purchase shares from publicly traded exchanges only. Once ALPP is on Nasdaq, it will mechanically attract an influx of institutional shareholders and push up the share price. Before we move on to my recommendations, if you like my content, please like, comment, subscribe, and check out my channel for more stock analysis videos. My recommendation is to buy the stock. The recent slump in its stock price is probably caused by the selling pressure throughout the financial market, not directly related to the company itself. On the other hand, the recent stock sell-off has provided us a good opportunity to determine if the current price point can be held up as a support line, as it has been a psychologically important level for 2 different occasions back in December 2020 and January 2021. My personal strategy would be to wait a day or two to see if the price can stabilize around the $4 level. If it can, then definitely buy it at least 60% of the allocated amount, and to gradually buy in the rest of the shares in the upcoming weeks. If it does not hold at the $4 level, then we should reevaluate if the stock is still in a bullish phase and should be more cautious in buying. I would suggest in that case to buy up to 30% of the shares as long as the stock remains above the $3 level, and to further reevaluate the position once it gets below. Realistically, by that point the stock would have entered a bearish phase, but it would not be as bad because the exposure by that point would be relatively low, assuming that there is a good discipline maintained on buying and selling executions. Due to the speculative nature of the trade and the current market condition, I would suggest to keep the maximum exposure below 1% of your portfolio. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.